Oh, it's very zoomed in. Zoom forward. That's decent. I feel like it's more zoomed in than before.
Hey,
Hi,
Chris,
Tyler.
can you hear me?
I sure can. Can you hear me?
Hey, Chris, can you see me? Can you hear me?
I got it.
Awesome.
I can't hear you.
Cool.
Great. Well, thanks for hopping on the Zoom call with me. It looks like everything's recording, so we should be able to capture this.
Awesome. I appreciate you taking the time out of your busy day to sit down and answer some of the questions I had about investing in Kombucha Town.
Of course.
Yeah, so I know a lot of people out there might not know exactly what Kombucha Town is and what your guys' mission is and who you are. So if you don't mind, if you could just introduce yourself a little bit, and then I'll introduce myself and we'll get right into it.
Perfect. That sounds great. So I'm Chris McCoy. I'm the founder of Kombucha Town. I actually started the business back in 2011. So we've been in the kombucha industry for a while, since most brands in the industry right now are relatively new to the market. We've always been a bit of a pioneer in the industry. We were the first to bring a live canned kombucha to market. And so that was kind of the first big innovation that helped us kind of expand into more than just a very small local regional brand. From 2011 up until about 2014, when we started packaging in cans, it was very much very kind of a small mom and pop. I was selling at farmers markets. We were using reusable glass growlers, kind of like a milk bottle deposit system. And actually founded the company originally back in 2011, so I'd be able to support my mother, who was recently diagnosed with early onset Alzheimer's. So it was kind of run like a mom and pop. You can actually, if you look real close, and that little picture right there is her and I back in our original facility back in about 2011. So she could help wash bottles and do stuff like that. So it was really nice. It also gave me the flexibility to be able to grow a business, but also provide care for a family member. Because before I'd been working at I was doing construction. I was really into green building, actually. And so that was a 9-to-5 job, and I wasn't able to help care for her and do basically carry a profession at the same time. So that was a really good sort of like starting motivation to get into a business. Kombucha, the reason I chose kombucha personally is that I learned to brew it in college, and I'd been drinking a lot of energy drinks and coffee, which I think most college students do. And it was really weighing on my energy levels and just my general feeling of wellness. And so kombucha helped with that tremendously. So, and I was studying environmental studies and economics. And so I was able to see as a trend that kombucha was becoming available in more stores. There were more new brands. And so I saw that as I was learning in econ, emerging industries, it happening with kombucha. And so, to me, that identified it as a pretty good economic opportunity. And then kind of the last real piece of the puzzle as to why kombucha was that it's very low impact product to make. All it takes is tea, sugar, and packaging. And so with aluminum cans, they're by far the most recyclable packaging option. Also, they're very safe, very convenient. They're still manufactured in the United States. They're even an American innovation. So, that kind of environmental piece is something that, having grown up in rural Southwest Colorado, and then living up in Bellingham, Washington, which are both very beautiful places, is something I wanted to preserve and protect. So those are kind of the main reasons I got into the business. And now really, it's just been continuing to grow and kind of snowball over time. My job before this was, I had been working construction, but actually right before I jumped into the business full time, I was delivering sandwiches for Jimmy John's on my bike in downtown Seattle. So I'm an avid cyclist. So I've been riding my bike my whole life, and I love the Pacific Northwest because you can mountain bike, road bike, trail ride. There's tons of great ways to get on a bike around here. So I sometimes joked that was my job before becoming the CEO of Kombucha Town.
Yeah, I love the marketing video where it opens on you on the cycle. That was great.
Thank you. Yeah, so that's kind of the quick and dirty. And now, we've been growing. We've gotten, I've done some international sales. We've been able to get our products distributed all over the country, up in 30 states. through UNFI, and now we've got another national distributor coming on board here in the fall for a new product line. So, we're really, really positioned as an emerging brand, and I was very excited to see a more ownership-based crowdfunding model be an option. And so that's something that, one of the big, probably sort of aha moments from COVID was like, okay, what are some alternatives here? And that one came up, and I'm really excited about it. So I really appreciate your interest and meeting with me to chat about it.
Yeah, I'm very excited to have the opportunity to invest in Kombucha Town. I love your marketing, your mission, just your passion for the industry. And it seems like you guys are just a really great, tight-knit community that really wants to help other people. So I love that. A little bit about me. Bashir. I'm currently in the Navy. I'm a nuclear engineer, and I amassed quite a bit of wealth from investing and being successful in the stock market. And so when I found out about Start Engine, I looked, found Kombucha Town. I asked to interview Chris because I want to make an investment into his company, and I had some questions. So if Chris, you don't have any other questions, I want to get into the actual investment questions about the company.
That's awesome. I just want to say I've got a really strong Navy lineage on the dad's side of my family. So I've got a lot of respect there, and almost ended up in the Navy myself a few times. So it makes me happy to hear that that's kind of how, what your path has been, and that can be a continued part of this business.
Well, yeah, thanks, Chris. I'm glad you ended up doing this, though, instead.
Who knew, right? I was like, all right, Navy SEAL or a tea company. Tea company. So it's very healthy and a lot safer. So that's good.
Yeah, absolutely.
Yeah.
Yeah. So hitting it right off the bat. So what is the total debt owed right now by Kombucha Town?
So we've got a couple of different classifications of debt. And so all of our long-term debt, which does include something that we'll speak to a little bit later down the list, about $400,000 in convertible notes, which will essentially become equity. And so the total long-term, including those notes, is $1.3 million. And then we've got our current debts, which is kind of accounts payable and everything that goes into our supply chain and that's $237,000 currently.
Okay. So a total of 1.57 million?
Yep.
Okay. Awesome. Very cool. So it's nice to see that not a lot of current short-term debt, all of that seems to be more stacked toward the long term, so you can continue growth now. That's great. So the total retail sales on the profit and gain sheet you sent me said only 14,000 this year, and I imagine COVID's hit a lot part of that. But your total sale of can income was up to 565 grand. Now, I had a big question about this. Is this direct to consumer? Is this through your online sale? Where are you selling these?
So retail sales, so we do most of our business in wholesale through other distributors. So we sell wholesale to distributors, then they sell to the grocery stores. And so that's the bulk of the 565,000 there is selling to wholesalers. The 14,000 in retail sales is just our web sales, because that's all our direct to customer business. And so that's something that we've really only started back in April. We have been investing more in building out the infrastructure for more retail sales. So we do anticipate that continuing to grow. We've recently listed all our products on Amazon, and we're running more and more digital advertising campaigns to fulfill direct to consumer. So this year we have definitely been pretty heavily investing in more digital advertising and the infrastructure behind it to be able to scale our direct to consumer sales. A big part of that has come from the wholesale distribution and direct to consumer distribution networks becoming much more efficient, so we can actually ship a pretty heavy product and at a profit. And so that's something that we've wanted to develop as a channel to both broaden access of our business to anybody that can go online, but also just diversify it as more revenue. Because if we optimize it, we'll actually likely be able to make even a better margin than when we sell to other retailers, because there's a distributor and a retailer involved, which is several middlemen that take a big part of the margin.
Yeah, absolutely. Which actually leads me to my next question. So based on my quick math or whatever, your margins are around 50% on your wholesale. When you're trying to push this direct to consumer, how far do you think that will push margins, and how far do you think that could, what is your growth projection for next year as your online business grows?
Yeah. I think I got that. Your audio got really quiet there. I don't know if maybe that got turned down or something. Um, can you hear me?
Yeah, I can hear you fine. Am I
Okay, I can. Your audio just went really, really quiet. I'm not sure why. Maybe give it a try. Is there a volume?
Yeah, is that better?
It's still very quiet. Let me see what I got here. Yeah, I haven't changed anything on my side. I don't know if maybe it's the headphones or something.
Yeah, I didn't really bump anything. Or, let me see if I hit this.
Oh, huh. Now it's even quieter. Went the other way. That's weird. I wonder what could have changed. Everything looks good here. Maybe I can edit your. Let's see. Try talking. Weird. I can't hear you. Can you hear me fine still?
Yeah, I can hear you just fine.
Okay, I can hear you a little bit. I might be able to throw. Maybe I have any headphones. I might be able to throw some headphones on. That might help. Let me see. It's okay. Let's see if this solves the problem. Okay, try talking now.
Yeah, can you hear me, Chris?
It's still super quiet. Huh.
Still super quiet.
I don't know what the deal is. Shoot. Maybe could you try and go out and then come back in?
Yeah, I'll do that.
Try that.
All right, how we doing? Can you hear me again?
Yay!
Okay, cool. I don't know what happened there. Sorry
I
about
can
that.
hear you again. It's probably a Zoom thing. Because I didn't change anything. If you didn't change anything, then.
Yeah, that's what I love most about Chris, though, guys. He's a problem solver and he's quick on his feet.
Hey, thanks. It probably would be hard to edit that little weird quiet section out, but whatever you want to do with it.
Yeah, no big deal. As
Okay.
long as we're getting the information out there, I'm sure people will still love it, you know?
Great.
So yeah.
Could you just go back to essentially like what you're talking about like projections for both?
Yeah, so I had a couple of people ask me to ask you, what
Okay.
your growth projections are for going into fiscal year 2021
Mhm.
and where you see this online business and how direct to consumer sales could increase margins and by how much.
So it's a little forecastability has been like the worst it's ever been with COVID, obviously, and who knows what's going to happen into the fall. Luckily we've been seeing a little bit of reprieve lately as things kind of gradually and incrementally open up. With that, like a big part of it is also how much we have as a sort of an ad spend or a trade spend for our marketing budgets. So some of it's contingent on our ability to raise money, both through the crowdfunding campaign and other ways that we raise money. But if we are able to raise to the level that is needed to kind of continue the trajectory, we see that our growth will continue to increase. And so likely we have a few different models, right? There's like worst, middle of the road, kind of best case scenario. So,
Yeah.
For me, I think best case scenario for e-commerce sales for 2021 would likely be around $120,000 to $200,000. That would be, people continue to spend, the economy continues to rebound, we have a good trade spend to develop those channels. And at that point would become a pretty substantial, it'd be, about 10% of our business. As of right now, it's only a few percent of our business. And so that, with that, we'll be able to start doing actual fulfillment through a fulfillment center and having fulfillment centers in like several different hubs. And so we'll be able to have an east-based and west-based fulfillment center. So it'll bring the cost of logistics down. So we're not shipping all the way across the country for anybody in the east. That should save us about 10 to 15% total there. And so that will hopefully, all said and done, give us a 20-25% margin on that channel. With that, that's compared to our retail channel, which right now 10 to 15 is kind of where we're at. It will go up as sales increase and we get more above our sort of break even based on debt services as well as our overhead. So that's kind of like, in short, what we're hoping to expect. Obviously, we have some contingency plans if we don't hit those numbers for both internal and external reasons. But that's what we see on the e-commerce side. For retail, we're hoping to see our business grow, well, to bounce back and then surpass our 2019 numbers and hopefully land in the 1.8 to $2.2 million range. We've started to procure some of the business that we'll need to do so, and we actually we had a lot of that business in the pipeline already, most of which was Kroger, who had authorized us to be able to begin distribution to 800 stores. That was supposed to happen in June, but they canceled that reset because they didn't have the manpower based on the surge buying from all the stockpiling, as well as the increase in need for sanitation procedures and things like that. So that's been pushed back a year. So we're anticipating that's still happening. I can't guarantee that it will, but we've been told that it will. And so that is hopefully another at least $500,000 in business that we were planning on and have invested in getting this year that will roll over into next year. So there's, that's a lot of the work, is like kind of the triage of, okay, where were we positioned? And then, what are the reactions of the retailers? And then how do we preserve that to make sure that it continues to grow that way?
Yeah, I do want to say, though, even with COVID-19 affecting you guys, I still think it's incredible you're able to do over $500,000 in sales so far this year. That's crazy.
Thank you.
Yeah, a lot of other small businesses or mid-cap or whatever you want to consider this is taken such a larger hit to this. So I think it speaks a lot to your company's health and growth capabilities. Yeah.
Yeah, I think we've been able to pivot well. I mean, it's hard, right? But at the same time, if you look at it relative to some of the businesses that have been completely shut down, we're faring pretty well.
Yeah, absolutely. So speaking of the economic downturn and the harder time on businesses, I know you guys have been operating in the red for a while now, and it looks like August you finally turned a profit now with stuff coming back up. Mm-hmm. If COVID is a longer term effect and, we were talking about middle road, best case, worst case, if we hit the worst case, this thing expands out another 6 months, 8 months, how long can you guys afford to operate in the red?
So we manage our cash flow based on basically worst case scenario, right? Because cash is king, and without it, we can't do anything, right? And so as of the way that we have it right now, we'll have plenty of cash we'll need to continue to operate without taking on any more debt or outside investment. So that doesn't count any of the start engine money that we've already raised through the end of the year. With that, we've got a couple contingencies through the end of the next quarter, because we do have a regular seasonal decline in sales in the winter anyways, just because cold carbonated beverages sell more in the summer than the winter. We're in North America, so that's the thing. So we currently have the cash needed for it through the end of the year, and that's not with the start engine money. So with the start engine money, we'd likely be good until the end of January or February, and we're also going to be continuing to raise money for the next 60 days with start engine. So, with your investment and others' investments, that'll buy us more time, and that's a sort of worst case scenario stance anyways. So, as we get traction with our new product line and online sales continue to build, I'm interested to see, because this will be our first holiday selling season through e-commerce, which is its busiest season is. That's one of the biggest reasons I wanted to invest in it was, hey, normally we're slow in the winter, but if e-commerce is busiest in the winter, then that should offset that seasonality a little bit. And so, given what we've already raised on Start Engine, we do have a couple of lines of access to capital. It's just really expensive capital that I'd prefer not to use. We're talking like 15% or more APR just like short-term business debt loans, which I don't like using. I mean, you can in a pinch, but if I had to, I could. So Start Engine seems like a much better option for us now. And based on the traction that we have now, and I think that this Q&A session will actually really help kind of continue to get people to like further vet the opportunity. We'll be able to like have really no real strong worries about sort of operational cash flow, and can be more strategically looking at what are some of the selling activities and marketing activities we can do to continue to grow profitably. So that's kind of where we're at from a cash position right now. And we do a weekly basis of expenses to make sure that we audit our expenses to make sure that they're on track with our cash flow plan. And then every month kind of review what happened and how, on a farther out basis, things are continuing to look. So that's been like probably one of the top priorities through the COVID period, is as things are changing so quickly, it's just staying on, like relentlessly staying on top of cash flow, because it can quickly get out of hand and you don't want to get caught without any money to keep you going. So luckily we were able to get the PPP and the EIDL loans, which have helped with that, kind of soften the blow of COVID tremendously.
Yeah, awesome. So glad to hear it. It's awesome that you guys could sustain worst case scenario into the next calendar year. That's incredible. And I agree with you. I think that e-commerce will definitely help offset some of that seasonality. And I hope you guys explode on e-commerce, and that will grow into a big channel for you guys.
Thanks. This should help. It's creating good content. So that definitely helps.
Yeah, absolutely. It's always good to, get the face of the company out there. I appreciate you again, taking the time to sit down and talk to us. But yeah, so moving on, speaking of capital and everything, so on the Start Engine page, it says that you guys have raised $500,000 in equity-based fundraising previously.
Mm-hmm.
I'm just curious at what percentage or valuation was that? So how much of the company, if this Start Engine reaches the 1.07 million maximum fundraising, how much of the company would have been given away at that point?
So that 500K figure is a mix of both direct equity, so an angel investor who did buy 20% of the company back in 2000 and early 2017. He bought that equity at a $1.2 million valuation. So he bought in 200 grand. And he has, I guess it's a $1 million valuation, and then the goodwill equity after was 1.2 because he put 200,000 in. But so he's got 20% of the business, and then the remaining is on convertible notes. So the notes have the same cap as the round that we're currently raising on Start Engine. So the valuation cap there is set at 20 million. We will very likely be raising more money at a lower valuation in the next year or two. But that's kind of the precedent that was set based on last fall when we raised money via a convertible note. And so that's kind of baked into the equity piece because it will ultimately end up as equity. So right now it's showing as debt, but I still consider it as something that is a dilutive source of capital. And that's why I kind of consider it equity. So with that all said and done, we will likely be, I'm just going to say 10 million because that's probably that I have a feeling that that's going to be what we really raise the next sort of big $1 million check at. Then we'd be looking at about 20 total about 25% dilution, and then another 10% that would come from the Start Engine. So about 35% dilution of the company at that point. I have two very small advisor equity holders, but they're at 1%. And so I'll still have plenty of controlling equity, and it'll also give us chance to be able to raise further rounds if need be to continue to grow and scale the company, because it's very common to need several series of investment as the business grows.
Mm-hmm. Absolutely, and that's incredible. It's a very, very good job in raising capital and maintaining a lot of your equity. You see a lot of these investors start their company and they have to raise money so quickly they throw their equity out the window. That's incredible that you still maintain over 60% of the equity.
Hey, thanks. It's been interesting to watch too. There are a lot of my peers in the industry I've seen dilute down to almost nothing. I have some other beverage entrepreneur friends that have actually diluted so low and then kind of gotten kicked out, which is, I mean, it happens. That's what VCs and private equity often do. And it's really interesting. And one of the reasons I was really excited about the equity crowdfunding is that, hey, you have a community supporting you, and it's not like this board of ruthless capitalists that could just kick you out whenever they want. So,
Yeah.
I like the idea of being held accountable to a strategic partner in that way, but I've also seen the downside of it when it doesn't work out. So I think this is a really great way to build a business and not overhead it as well.
Yeah, absolutely. So I know you talked about a little bit in the growth, about, how you guys plan on expanding and getting fulfillment centers. And on the search engine page, it also talks about a kids line, a performance enhancing recovery drinks, and a potential alcohol line, all within the next about 2 years, it seemed. And currently right now, as we've talked about, due to COVID-19, performance and growth has kind of halted or not gone up as much as desired. Do you think that pursuing all three of those new activities isn't spreading yourself too thin too quick, and you guys should just focus on what you have now and build up? Or, well, I guess my problem is looking at it as an investor is, why would you continue to create new SKUs and product and increase overhead and costs for this new stuff, while I think you've got a great proof of concept on what you have works and you could build it back up to grow?
Yeah, no, that's a really good question, and I think this is something that we will lean on the investors from the campaign a fair amount in deciding, how much capital we have, because the more capital we get, the more we can do in R&D and project development, build a sales team that's sophisticated enough to sell several different lines. And so really the timing of it depends on when, market trends. Whenever we do a new product line, we do sort of test marketing, like in a much smaller scale, and with smaller runs, obviously, to see what the velocity of that looks like and what the buyer's tolerance or level of excitement is. So these are sort of concepts that in the next, and it'd probably be, it really depends, but the timeline of it is, I don't have hard set dates on when these will launch, but these are things that I would like to continue to develop and then roll out as it makes sense. So, that is to just really show that, hey, we've been an innovator in the industry. We were the first kombucha in a can. We were then the first shelf-stable live kombucha in a can. Now we're the first live seltzer, so the first probiotic seltzer water. And so that's something that I see the innovation being able to continue to drive the growth and the long-term viability and success of this business. And so it's something that it's important to me, but at the same time, like the details of when it makes the most sense strategically, the cost of getting it started, and like how we're going to strategically roll it out, that is all going to be very much contingent on how much money we raise, what sorts of sales talent and strategic partners we're able to really start to work with. And that'll really kind of throttle what that product roadmap looks like. So, in an ideal world, we could potentially get, another 2 or 3 product lines off the ground in the next few years, to have something every new that's fresh and relevant and exciting. But at the same time, I mean, if we're running with just a seltzer and we're selling a ton of it and we can barely keep up with that growth, then obviously we're not going to go and try and kick out new lines. So, it really just, to me, diversifying and innovating are really important to just my personal value and vision. But at the same time, like, you do need, I very much appreciate that you're asking about, like, hey, what about focusing and maintaining and like really getting the most out of your existing investments? So that's something that's, it's a balance that requires kind of cognizant checking into. We do that regularly now with my advisors. I've got several top advisors with a ton of experience in both beverage and other natural and natural food service channels. So I kind of ping them, as well as, as my career develops, I get more and more access to and working relationships with high level buyers. So those are the kinds of things I kind of lean on them to figure out, hey, what is the timing of this? Is it too soon? Is this something that we should be prioritizing? And so right now we definitely have our hands full with the new product line that we're just launching. And these are more so just ideas of things that we could do in the future to continue to keep that edge, because all these markets are getting more and more competitive all the time. So there will probably be a little bit of washout from COVID, as far as, some of the less dedicated or well-resourced players will wash out. So that might even make more room for growth with our existing product lines. So we're very open and looking for ways to diversify with not only our own business, our existing products, but potential new products.
All right. Yeah. I love that answer. Something I never even thought about too is that potential washout and potential growth for you guys with your sustainability. That's a great point. Love that answer. Loved everything you hit on there. And I don't know what else to say. That was awesome. Yeah. So the next thing I wanted to talk about or bring up is, and you touched on it a little bit, but just a little more concise answer towards this, I guess, is a trigger point listed for these promissory notes is whenever you guys decide to do another round of financing totaling $1 million. And I know you touched on, worst case happens, you guys might need to finance again. But where do you see yourself raising another round of financing, and how would you get that debt? How I know you talked. Hopefully, that's not where you need to get it from, but where would you pursue more capital if needed? And I guess. Sorry, that was a long worded question.
That's okay.
I'm a little nervous.
No, I get what you're asking, and it's a really good question to be asking. So right now we've got a couple, I already have a couple of, I've got relationships with a handful of firms and more wealthy angel investors that I kind of just maintain relationships with. And so there is, I've also talked to other businesses as well that are interested in in becoming strategic partners or potentially merging, stuff like that. So, if there was a big opportunity to be able to much more rapidly scale the business, I would likely partner with one of those people as long as the value fit was there. And I've already got relationships with a couple. I can't really speak as to when it would happen exactly. But I think that it depends on how much we raise through Start Engine. If we raise the maximum of $1,070,000, we'll be set for a good long time as far as cash flow runway, and have some real flexibility as to ways we can optimize our business model. So the need for finding that partner, or at least the drive behind, or the urgency behind it, wouldn't necessarily be as high. But I think that in the next 24 months, likely by the time that the note matures, that is the vessel for this investment, we'll have brought on additional capital or taken on one of those triggering events, which will give the note holders the opportunity to convert. And then you can look at that point, having a hard valuation on what you're converting at, and what the appreciation of it has been based on the interest rates and the discount rates. So, I would anticipate that in the next 24 months, we will either do a formal Series A, or we could potentially do a merger and acquisition deal. I don't see that being as likely. So I'd much rather bring in a strategic partner, have them get some skin in the game with a substantial investment of $1 million or more, and then with that, they get a decent chunk of equity and likely a place on the board or some elements of control to secure that. And then after doing business for a good period of time and hitting some of our key performance indicators, then it would make sense to discuss if there was an acquisition deal or something like that. Because I don't want to sell the golden goose, and I don't want to gut my company and its values for a big paycheck. So I am an entrepreneur, and I would love for that to happen, but I want to make sure that it's done in a way that it's it feels good to my vision. I am able to continue to grow and to build my business and my professional career. So that's, it's hard to say because I can't just be yep, next October, we're going to get a $2 million check at a $10 million valuation. I don't know, yeah. But it's something like that could happen. So hopefully that gives you a little bit of an idea of at least my mindset behind how I would make that kind of decision.
Mm-hmm. Yeah, and I think it's also great that you've maintained this much equity still to where, like you said, if you needed to get a strategic partner, another big angel investor, you have that option. You have a lot of options on us, and that's incredible. You're not having to tunnel vision or lock into one strategy to be successful. I love what you guys have, and I also you touched on love that your values and morals come through in your business, and you embody them, and I think you're a great role model for young entrepreneurs out there.
Thank you.
Yeah, I love that answer, man. So moving on, another thing on the Start Engine website for investors is I think I don't have it written down right now, but I think it was 50 3 trees or something like that for every $10,000 that was invested. Which if you raised the 1.07 million, I think it totals up to about 53,000 trees. Do you have the land for that? How do you go about getting these trees? What's your cost per tree? Because if each tree costs you $10, then that's already $500,000 towards trees, and that's half of the investment.
Totally, yeah. So I'm glad you brought up the trees because it is a very important part of this campaign. So that we partnered with it's called One Tree Planted, and so they're actually a quite a successful nonprofit organization that does the actual tree planting and the procurement and the work days to plant them. They actually work with local like cities and municipalities to create the project spaces, because what they do is they plant the trees on by rivers and creeks that for our natural salmon habitat to enhance them. And then that helps bolster the salmon population, which then in turn creates more food for orcas in the Pacific Northwest. So they manage all the tree planting, and I really like that the value of each tree to me feels higher because it's helping create biodiversity. And so they already have all the land. They have they do have all the relationships with the parks and the cities. And so for us, it's as simple as a $1 per tree for us to have those tree planted. And so if we are to raise our max, then it'll end up being about 5% of the total raise will go to planting trees, which to me is really exciting because 50,000 trees would be several acres of trees. And that's a big restorative project. That's something that we can really highlight and showcase. We can talk about it, in our branding and our marketing. We can participate and feel good about it. I think it's something that will really, as I see the natural food industry develop, is like necessary for people who know more about brands than ever to really build that loyalty and to give them a good reason to be loyal to and consume your products. I mean, obviously we want to have something that tastes good, that's refreshing, that's good for you. But on top of that, if you can feel good about helping restore the environment at the same time, like to me, that's the future of what business should look like. And so I'm definitely glad you brought it up. And also we're very cautious of not spending all of our money on just planting trees because that would be very economically viable. Yeah. So so it's all said and done, we're really looking at about 10% of what we raise going to being the cost of the raise. And so that includes start engine fees and everything like that. And so that is something you definitely have to take into consideration with crowdfunding, because it's you have to market it, you have to advertise it, you have to actually make and deliver the incentives. So all of that will likely be the planting and things like that, and all the incentives will likely be landing by the end of the year. And then some of it might be the first quarter of next year, depending on when the actual planting is feasible. Because in the winter, it's not necessarily the best time. So that's kind of how that plans to roll out.
Awesome. I feel like every question I get fall more and more love it with you and your company. Your guys' vision and your impact on the world extends way beyond just your product. And I didn't even know planting trees could do that. It ends up getting more food for orcas. Who would have thought? Like, that's awesome. That's incredible. So another thing, you talked about the other perks that are offered on Start Engine and how they would be, closed out by maybe the first. So it's that kind of answers the next question that I had was it's lists on there that all perks will occur when the offering is complete. You touched on that. Just wanted to clarify that position for the viewer that sent me that question. Cool. And then how do you plan, if at all, to increase your internet footprint? Because it is a damn shame, pardon my French, that I've watched your videos, I've looked at your Facebook page, your marketing is on brand, it's high quality, it's perfect, and it's up on the and it hurts my heart to see it. And do you guys have any plans on how to increase that going forward?
Oh, definitely. So we've been kind of working with and kind of vetting and investing in different channels to be able to advertise. I've started working with an actual like Facebook, Google advertiser that manages those channels and those paid advertisements. We have a plan of, you have to invest in finding the right target audiences and the right messaging. And then from there, you can find the return on your advertising spend. And then once that gets to where it's profitable, then you can scale it. So we're kind of in that, just figuring out how to make sure our advertised spend is profitable. And so we're probably, I'd say about 6 to 8 weeks away from being able to do that and starting to ramp it up. How fast we can ramp it up is highly dependent on how much money we can raise or get from profits from sales. So that's kind of one of the tactics. And then also we've started working with an awesome PR agency, which is called Publicity for Good. And so they really work with getting earned media placements and high-level media to be able to kind of spread the word about our story and our vision and our values. So that's another big piece of how to kind of really spread the word digitally. Also, we've been starting to invest in some Amazon advertising. And so as that continues to grow, we'll be able to kind of continue to rise up the ranks of the Amazon business there. Some of the top performing kombuchas right now are doing $30,000 to $50,000 a month. So, you know, my goal is to, by the end of next year, be on at least on the first page, if not top 3 kombucha brands there. And so those are some of the things now that we're working with. I've toyed with the idea of doing like some high-level influencer, sort of celebrity endorsement stuff, which definitely helps with online sales. And then on the operational side, finding strategic partners that can really help with fulfillment and making sure that the product's getting there undamaged on time for the cheapest we can. That's kind of more of the ops side. So that's trying to make sure our cost structure is right. So that's really how I'm looking at it and how I've seen it develop. You know, how much and the rate of that is going to be able to happen is pretty dependent on, you know, how the market responds. Also, you know, how we're able to really, in a sophisticated way, create an ad spend that can grow with our sales.
Absolutely. Oh, awesome. That's really good to hear. And I like the goal of moving up the ranks on the Amazon marketplace. I didn't know that 30 to 50 grand was being done every month by those top guys. But again, looking at your internet marketing, I think it's very high quality. It's on your brand. I think it's really well done. So I don't see any reason why you guys couldn't get there, like you said. That does it for about my business questions. And I just want to say to all the people watching out there, thanks for watching. I hope we answered your questions. And we've talked a lot about investing today. And Chris, and on my channel, we talk about investing a lot. But remember to take the time to invest in yourself. Most importantly, take care of your mental health, take care of yourself and those around you. Chris is a great example of how he helps everyone around him, and hopefully that you guys can look at this and use him as a good role model to follow. Anything you want to say to the people out there, Chris?
Just thanks for taking the time to hearing us out and to take a look at our business. And, you know, if you do choose to invest, we'll all be working tirelessly to make it one of the best investments you ever make. So thank you very much. And also, you know, anybody that is seriously interested in investing, you know, you can reach out to me directly. The best way would be just chris@kombuchatown.com, and then we can set up a call or do any sort of questions, just very similar to the way you did, Tyler. And yeah, so that's the best way to do it. And, you know, also you could reach out to Tyler as well and he could connect us. So
yeah, thank you for your time, Chris.
Likewise. Okay. By saying, yeah. I just want to make sure.